my lips look dry. Okay, hopefully that's better. Hello, hello. Let me split my screen. Okay. Okay. Just a moment. What happened? Really? Give me just a moment. Get something situated. What happened to my screen? What is going on? There's always something with this freaking. Okay, I'm trying to see what's going on while my. I'm trying to see what's going on while I can hear you. Okay, I was just saying if I had minimized the screen on YouTube, were you still able to see me while I have my PowerPoint fully open? But it seems like it doesn't matter as long as I have the YouTube open. It reconfigured it, but I can still see the content. That's all that matters. Okay, now she can hear me. Yep. Okay. You're perfectly good. All right, that's fine. You can go ahead. Thank you. Appreciate you. Okay, well, I can go ahead and minimize my YouTube because it doesn't matter either way with my PowerPoint. I guess because since I have YouTube open regardless, it has reconfigured my PowerPoint, of which I'm going to post after the video anyway, so you all can have the PowerPoint to reference. So, hello, welcome back to King's Legacy Group. We are here today, I'm here today talking about life insurance. You all have heard me several times stress the importance of putting security measures in place for you and your family. So this is going to be the topic today. And again, once this video is completed, I will post the actual PowerPoint presentation so you can have the information to reference. And hopefully in the end, you will use it when you schedule an appointment and speak to your insurance agent. So as always, I'm going to be sharing some great information that will help you improve your life circumstances and be surprised at the information that has been here for generations. We just didn't utilize it or made the excuse of not knowing or to find out the information. So that's why King's Legacy Group is here, to bring you the free information that's already out there. So let's get started. Again, this episode is on life insurance, about the protection, security, and the ability to make it your own family's banking system. So let's go over the basics. Disclaimer: the information King's Legacy Group shares is based on our own opinions, experiences, practices, and insight into the strategies suitable to our family's financial wellness. We are not financial advisors, insurance agents, investment brokers, etc. And our videos are for informational, educational, and entertainment purposes only. You must do your own due diligence and seek professional assistance when you find the need to confirm or expand your understanding of the knowledge on any topics covered on this channel. Always remember to make smart decisions that suit your own needs and do your own research. Now, those of you that are new to the channel, I'll briefly explain who King's Legacy Group is. King's Legacy Group is a financial literacy platform that is bridging the gap between the youth and the mature adult to achieve generational wealth, providing the tools and the resources to understanding financial literacy and how to change your mindset to make good money decisions from good money habits that will empower you for the rest of your life. We teach the practices needed to achieve financial wellness and how to adapt the belief of when you learn, you grow, and then you can earn the wealth you deserve. What King's Legacy Group offers right now, we have live Sundays and live Wednesdays. Sundays are geared towards our youth ages 10 to 17 years old, and we will have monthly special guest appearances, and other social media postings are available throughout the week. Sundays, we are here at 5 p.m. Eastern Standard Time. Wednesday live at 7 p.m. Eastern Standard Time, we are targeting the mature adult ages 18 to 65 years old, okay? Also with specialized guests that are geared towards an adult audience, giving direct insight into their profession on the topics that we produce for you all. And again, there are also other social media postings throughout the week. Now, again, if you are not familiar with King's Legacy Group and this is your first time viewing one of our episodes, we cover a lot. Again, this is about the development from childhood into adulthood, to be able to transition into adulthood with all the tools and resources, knowledge, and skills training that we need to achieve financial wellness, generational wealth, and develop a good relationship with money that helps build our platform that leads to success in life. Our motto here at King's Legacy Group is a road better planned is easier traveled. And that is true to everything in life. If you plan things out, you have a better chance of avoiding a lot of errors. Okay, making bad decisions, making mistakes, and having to recoup from those mistakes. Before we get started, we ask again to support us. It takes you less than a second, please, to click like, click share, make a comment if you like, whether it's something positive or you want to give some supportive criticism. All is welcomed. And if you would like, you can click subscribe and you will be notified of our live postings. Okay. All right, let's start the conversation about death. We have to start having family meetings about death. It's coming for each and every one of us. It's no way to get around that at all. It looks so dark. Okay, that's a little better. Okay. We have no control over how and when we die. The discussion should be about how can I or we as a family handle the process after someone's death. The discussion should be what can I or we do to protect the family in various ways. And also know that your habits, again, set you up for success or failure. It takes you making a commitment and sticking to that commitment for at least 6 months. After 6 months, you mentally automatically make those activities a habit. And those are the good habits that you need to obtain to gain generational wealth and financial wellness. Okay? Again, good decisions with money and having a healthy lifestyle work in your favor. Because if you are seeking and doing everything you can to get generational wealth, then you want to be in good health to enjoy it, right? I know I do. I mean, yeah, we trying to protect our family once we leave this earth, but there's some things I'm going to do while I'm alive, while I'm flexible, while I'm able to get around. So yeah, we got to get our health together as well. And again, it's never too late for anything. So let's move on. All right. What I'm about to bring up are common sense measures. We have to plan our future and the future of our beneficiaries with purposeful intention and directive. We need to gain a better understanding of the types of life insurance you can get for yourself, your children, and your parents, okay? And your spouse if you're married. Learn how to leverage your policy and create family opportunities. And last, know what questions to ask your insurance broker or your insurance agent, and have an understanding of what they are supposed to explain to you. I tell anyone that is, especially in business, and it's your business, even if it's something that you're doing just for the revenue, just for the income, nothing wrong with that. But regardless of whether you like it or not, if you're providing a service, especially a service, you have to master that job. You have to master everything that you're offering in your business. Because if you expect your customers to buy from you initially, you expect your customers to show loyalty, then you got to make sure you are doing what you're supposed to do as that provider, as that person in between whatever other company that's processing your information. My agent needs to show me they know what they're talking about. They need to show an interest in providing me a service and making sure that I'm making the right choices in that service. Okay? Having a plan in place. When we pass, we should not be or leaving our family in a position of not knowing what we wanted, where anything is, how to access anything, to carry out our wishes, or even what they assume our wishes to be. So having a family meeting to discuss your plan needs to take place before the next person dies in your family. Because if you haven't gone through the experience of losing someone close in your family and it was looked upon you to help bury that person, then you're in for a rude awakening and you're not going to be prepared when the time comes. There's nothing wrong with discussing death. It's going to happen to every single last one of us. Hopefully, we get to live a long life. But in the event that we don't, with unforeseen circumstances, we got to be prepared. So I want you all, text your family members. Tell them, let's have a meeting about life insurance and about death. I don't care if y'all make it a barbecue. Make it, just get together and discuss it. My family, we're going to be getting together soon to go over everyone's to go over everyone's death plan. And we're going to talk about some other things, life insurance, all that stuff. It all go together. No way to avoid it. And again, just to give you an example of how to have a plan in place, you must have an estate plan, a will, a living trust, an advance directive, a power of attorney for medical and financial, etc., etc. All that would be discussed in another video. You need to assign an executor of your estate that has all your contact information. Make sure the immediate family knows and the executor knows how to and have access to your sealed copies, contact information for the lawyer and the insurance company that you have coverage under. You need to choose someone you trust to honestly follow your dying wishes. You need to have a journal or a logbook, whatever you want to call it, that has all your login information for your accounts. Everything, and I have everything. This entire book right here has all of my information. And my family members will know how to get to it and know how to handle all of my accounts, from social media to banking to investments, whatever. They'll have access to go in and do what needs to be done to close those accounts out. Okay? You need to have a or all of your beneficiaries. With my bank accounts, I have all my kids as my beneficiaries on my bank accounts. And when I renew my 2 business licenses next year, I'm going to add Kayla as the word just slipped my mind. The oh my goodness. Anyway, add her as an authorized person in the business. So even when I pass, she'll take over control of the business and she won't have any issues accessing the money without delay. Having her and my 3 sons as beneficiaries on all the accounts is there if they want to end the business, close the accounts, and they split all the money. Okay? You need to have an emergency contingency plan in place regardless of anything. Let's say, for example, I'm out of the country on vacation and I die or murdered. There needs to be things in place that the family would know how to handle for me being out of the country, and to handle my affairs and to have authority to speak on my behalf and resolve issues. So yes, those are things that has to be in place. You have to start the discussion. And it's not just the adults. You need to involve the kids in the discussion as well. Okay? You need to input an exit strategy in your business plan if you are a business owner, which is in that exit strategy, you should have life insurance on you for your company as the beneficiary. So if the company, if my kids are going to keep the companies going, then they will have the opportunity to use that life insurance policy, death benefits payout, to help sustain the company, help grow the company, or just added financial capital to secure the company. So yes, discussions need to happen. We got to stop being scared talking about death, and we got to stop thinking that tomorrow is guaranteed. It is not. And if you don't understand that by now and you have kids, something wrong. You are in, let's say you're a single parent. If you don't have no will, and if you've been having issues with your child daddy, who you think gonna get your child and finish raising your child while you dead and gone? But you don't think that they're qualified or stable enough to provide and take care of y'all child. Then you got to have things in place so that your wishes are carried out. You may designate someone else to have custody of your child and handle your child's estate. So yeah. And then if your baby daddy or ex-husband with another woman raising other kids, you want them spending your child money on you. I'm just keeping it real. I'm a nice person, y'all. I love mostly everybody. But it is what it is. You need to have things in place so that your wishes are followed. And just having a will, that ain't nothing. That's just telling the court system after probate what you want done with your physical possessions. That's it. And they gotta wait 90 days or more for probate court. So yeah, it's a whole lot more you gotta have in place. All right, what kind of insurance agent should you have? Again, you need a proactive agent. If you have an agent who is just in it for the money, they have no interest in really looking out for you or listening to what your needs are. They're just going to give you a policy. They're going to give you one policy over another policy when the other policy is the one that you really needed and wanted, but they didn't listen. They're just trying to make a buck. You probably wouldn't even hear from them again. If you my agent, you going to hear from me for life. And I expect you to be available and provide me what I need. And if I'm making a wrong choice on something, you need to have that mastery of what you studied and got a license for, and provide me what I need and convince me I'm wrong so that I make the right decision. I don't need somebody who's just going to be on the other end, just ask me questions and fill them in on an online application and submit it and be done with me. No, I'll let you go in a minute and find the right person who's going to be my representative. That's what an insurance agent is. Someone who represents you. And you demand it. This is your money. This is your time. This is your life. So yes, any job I have done, if I provide a service or product, I'm going to provide you that service and product. Give you what you are expecting. So, what you're looking for in an insurance agent: one that can answer your questions promptly, showing mastery of the product. One who has confidence and the knowledge of the product they are selling you. I don't know why this mosquito keep coming around when I get on live. One that can give you solutions to your objectives, to the objectives you have with your policy. One that can be honest in response to what your needs are and not allow you to spend your money without intent. Your money should be spent exactly the way you need it to do for your policy to grow, for your finances to grow, whatever reason you are using or opening the policy for. Don't waste your time and money on buying something you don't need and that's of no real benefit to you. You're just paying a bill every month. That's on you if you don't hold your agent accountable. So go in to the appointment knowing what to ask and what to expect your agent to provide you. You need an agent, again, not one that shows they have learned the information to pass the test and only in it for the commission, which means they are not there to serve you effectively and develop that needed trust. I want an agent I can trust to rely on when I need to make a phone call and ask specific questions about the policy or make sure they direct me in the right place to contact for that information. I need someone who's present, accountable, and knowledgeable. Okay? You need an agent that will show interest in building a long-term relationship with you and for you. My new insurance representative, the policy that I got for Kayla, my last comment was, I'm looking for you to be my agent until you reach your late 40s. And I'll be calling in a couple of weeks to get some more policies on my other kids. And honestly, I'll be getting a policy increasing the value every 3 to 6 months. I have to find out exactly how often I can do that. That'll be coming up in the interview, and I'll share that later. Lastly, one that you can build a professional relationship with to keep you informed and check on your needs periodically. If I was an insurance agent, and I actually considered doing it, but I was just like, no, I'm going to focus on stuff I know I want to do. I know I would be good at it. I'm not just going to be on the phone and take an order for a new insurance policy and say thank you and have a good day and hang up the phone. I'm going to check with my clients periodically and make sure they still are satisfied with what they did, ensure that they know that you're available if they need additional life insurance. I'm not saying y'all have to be friends. I'm not saying that at all. But let's say something happens. Okay, let's say if I end up getting custody of family members, kids or whatever. I need to know what I need to do because in things like that, if it's not direct family, immediate family members, they can question why you would need a policy. And they're going to take you through extra steps to prove why you need a policy on that minor or that person. Okay? So make sure you have an agent that's going to be available. All right, let's get down to the insurance itself. There are two main types of life insurance: term life insurance and whole life insurance. Let's talk about term life insurance first. There are two types of term life insurance. You have a 1-year renewable term, which is also referred to as an OYRT. And then you have term life insurance that's a level premium. Now, a OYRT, the younger you are, is the lower your premium. So you young people, and what I mean by young, I mean by age 18. Age 18, you should be buying your own life insurance, independent life insurance. I'm not talking about the life insurance that your job may provide you, which is usually like $10,000. That doesn't go with you when you leave the company or if you are fired from the company. I mean, that's all good to have because they pay for that themselves. If you happen to pass away while you're employed with them, then great. Your beneficiary or family will get $10,000. Okay, but that's the extent of what they offer. So throughout life, you need to always have your own. Even when it comes to 401k, you should have your own independent Roth IRA. Yes, you take control of your money. So, you young people, again, you need to think about getting life insurance. And before I finish this video, you're gonna really understand why you should. It's another security plan you have in place for financial wellness. Okay. Along with the 1-year renewable term, you're always paying on a stair-step pattern that increases annually, which means your premium is going to increase annually. Okay. The level premium term life insurance takes an average of the amount of term you want, which is 20 years, 30 years, or permanent term, which means until you die. The policy covers your life until you die. Now, let me explain. And I know a lot of y'all that have a 20 or 30 year term life insurance plan. Now, before I spoke with my agent, I had done this research, okay, before I actually made the phone call to get some life insurance on Kayla and myself. So I asked the agent to explain further to make sure I completely understood what I researched. Once the agent confirmed what I researched and my understanding of it, my first response was, why in the heck would anybody get term life insurance? Oh my God. That is nothing but paying a bill every month in the hopes that you die. Yes, I said the word right. The hopes that you die before that policy ends so that your beneficiaries can get death benefits off of you. That's the only thing that happens. There is no value in term life insurance. You can't do anything with it other than hope that you die before the policy ends or have to renew the policy. And when you renew the policy after the 20 or the 30 years, it's going to cost you more because now you are older. Why are y'all paying term life insurance? You get nothing out of it. Nothing. Your family gets something out of it. Again, only in the hopes that you die before the policy ends. So if you don't die in 20 years of a 20-year policy, you got to renew it. Your premium is going to increase because you have aged and hopefully your health is not bad. And the cycle repeats itself. So again, if you don't die in another 20 years, you get nothing out of it. Same thing goes for the 30-year term. Now, the permanent term is for the extent of your life. So, I'm paying a permanent term life insurance policy, and if I live until age 99, when I die, my beneficiaries, of which my kids would be in the ages of 70 and 80, then they can get all the money. Yeah, my opinion. I'm not telling y'all what to do, but for me, myself, and I will never be buying a term life insurance policy. No, not. And I'll tell you why. Also, why kids, minors, can't get a term life policy, because a child will live longer than what they have on what they offer. That's why minors only qualify for whole life and not term life. Yeah, because they ain't gonna never they ain't gonna die. That if nothing bad happens, if they live a regular, healthy life, they not dying before that, so they don't qualify. I just understood that just now. All righty, moving on. Continuing about term life. It is more affordable than whole life insurance. Again, a minor cannot get term insurance. Coverage for a set period of 20 years, 30 years, or full permanent policy, which is last until the day you die. And your beneficiaries get that payout. You get nothing before then. It has no cash value. All right. Let's say a policy value of $500,000 is given to your assigned beneficiaries. For every $7 in term life of 20 years versus $100 in whole life insurance, during that 20 years, that's the policy value. But again, I gotta check on that, because from what I'm understanding, the value would depend on your age and your income. So that's why is that a set amount for 20 years? That doesn't make any sense. I can get that answered when I do my interview. So I'll hold that until then. Also, you're not building, investing, or gaining any cash value. Zero, nada. If I just want to pay a bill every month for the next 20, 30 years or the rest of my life until I die, a bill. I'm not even getting free electricity for paying that bill. I'm not getting any food for paying that bill. It's just a bill I'm obligated to pay every month if I want to have a policy in the event that I die before it expires. I know I'm a little loony, but I ain't crazy. So yeah, think about that one, people. Just a payout to your existing beneficiaries in the event of your death. That's the only thing you get. Yeah, we want to leave our family something, but I'm going to choose a better route. Yeah, so stay tuned. Just a moment. I'll be right on the slide. The pros to term life. You can replace your income by 10 times your annual salary. How are you replacing your income? Debt payoff for your estate. Oh yeah, when you die, your beneficiary is supposed to follow the rules of your will and pay off your debt. So yeah, that's a benefit. Business life insurance policy, exit plan that I had mentioned before. Exit plan mentioned in your business plan. This is to support your business after your death when you are a key person in the organization. So not even just the owner. Of course, the owner should have one, but a key person, a partner, a majority shareholder, whatever the case may be, that works within the company. I don't mean stock. I mean a person that physically contributes to the operations on a daily basis, a key person within the company. The company can get insurance on that person, because if they die, they are valued and will be missed and could financially impact the company in a negative way. So that insurance policy on that key employee can help the company sustain, put money towards hiring someone who's just as qualified as the person that's deceased, who had a key role in the company. So yes, having that exit plan within a business plan is crucial, especially if you are the business owner. Okay. The cons to term life: costly to renew. Remember, renewing when it expires in 20 or 30 years. Okay. Costly to renew or start as you get older in age. So yeah, it may be affordable to get started, but as you get older and you have to renew it, you probably going to be paying the same as you would in the other policy I'm going to be talking about. So why not just get started with it? Next, whole life. Again, there are two types of life insurance: whole life and term life. Now we're on whole life. Okay. There are two types of whole life insurance. You have your traditional whole life, which is also called straight whole life or ordinary whole life, but majority of the time is known as traditional whole life insurance. The second is a universal life insurance policy, which let's go over that information. Now, there are two types again of whole life: traditional whole life and universal life. The information I'm about to give now applies to both, and then I'm going to give a breakdown per coverage. All right. Coverage for life until the day you die with higher premiums. You know that saying, you get what you pay for? You get what you pay for. We got to stop being cheap. We got to stop trying to save a buck when it really doesn't save us at all in the end. It's going to cost you more in the end when you don't make the right choices in the beginning. As you pay your premium, the first 5 to 10 years, a large percent goes towards the salesperson in commission, admin fees, and fund the death benefit. But although that's true, you're going to learn something later on in the presentation, how that time can be cut and you can actually have cash value. So stand by. After the fees, you average 1.5 to 2.2%. The death benefit, which is the amount paid upon your death, and you are only paid, death benefits are only paid to your beneficiaries and cash value not offered on a term. So when you pass, yes, you have your death benefits, but the cash value is utilized during the policy while you are alive. I'll explain that further in just a moment. The cash value is only given to you. This is true, but this is not the only way. What I'm about to say only applies if you were to borrow against your policy, of which you should never do. You should never borrow against your policy. That defeats the purpose. Never borrow against your insurance policy. Okay? So what I'm reading applies to borrowing against your insurance policy, not what I suggest you do. But I'm just reading the information. The cash value is only given to you if you cancel the policy and you do not get the death benefits anymore because you surrendered it. Okay? Let's say you have built cash value in your whole life insurance policy. Something happens in life and you make the bad decision to cancel your policy because you want the money. Um, the only time I would agree to doing that, let's say there was an insurance policy and the beneficiary was my husband, and my husband and I are about to get divorced. Yeah, I'm not going to get the cash value out the policy because you're not getting no money off of me when I'm dead and gone when you done left me. So that's it. That's the only time I would take out and close my life insurance, depending on the beneficiary. And I use that money to open up another one for something else. Uh, do not, as I stated before, borrow against your policy. Instead, if you need it, to use the cash value in your whole life insurance policy. You would get a loan from the insurance company, your carrier, that has your policy. You don't touch or borrow against the actual policy. Let's say I have reached the point of having $25,000 of cash value. I call my insurance company to say, hey, I see that I now have a cash value of $25,000. I would like to get a loan on that amount. Not borrowing against my policy. I'm not cashing out my policy to get this money. I am getting a loan. The reason being, the insurance company will say, well, since you have a cash value of $25,000 and your policy is for $100,000, yeah, we can loan you that. The reason being, if you were to die before you pay that loan back, the insurance company is just going to take out what's unpaid of the loan before they pay out the death benefits. So if I have a $100,000 policy and I borrow $25,000 cash value, they're just going to take whatever I have not paid back, or even if I died the day after I got the loan, they're just going to take the $25,000 out of the death benefits and pay my beneficiaries and split $75,000. That's it. This is not a transaction that goes through your credit, nor goes through a traditional bank. This is a private loan between you and your insurance carrier. Ain't got nothing to do with nobody else. No different. Don't well, let me I'm skipping. Let me stay on track. All right. The cash value goes back to the insurance company holding the policy. And that's what it is. That's what it is. You can borrow against the cash value that is non-taxable. That $25,000, non-taxable. Come on, people. This is a win-win situation. I have just created my own banking system without having to go to a traditional bank and hopefully get the loan once they check my credit, business or personal, and wait for the decision for them to make on my life whether I can get it or not. I ain't got to worry about that. You got your own banking system in whole life insurance once you build cash value. And you can jumpstart your cash value the more you pay into the policy. For example, when I buy some more life insurance, let's say I have $6,000. If I pay $6,000 up front into my insurance policy, my new policy, I automatically am going to have cash value. And I'm just throwing some numbers out. I'm not being accurate right now. But let's say I pay $6,000 to start my whole life insurance policy. I've kick-started that door to generate cash value. Let's say once I do that and everything is processed, everything is approved, immediately I'm going to have cash value. Let's just say immediately I'm going to have $20,000 cash value in my policy. I could ask for a loan from the insurance company and get it within 30 days. How simple is that? And again, just throwing some numbers out. But whatever cash value you generate based on how much you have paid into your policy, then your agent should be able to explain all that. Or the insurance company itself, once the policy is already, written and sent to you, and you read over everything and you call with questions, you can ask all that then. But they can explain how the process works on cash value. But no matter what, you never borrow against your policy. You don't touch your policy. Your policy is still there, still generating for the death benefits of your plan. But the amount of the cash value that you continue to generate, I don't care if it was $50,000 or $100,000, depending on what kind of coverage you got. If you got a $500,000 policy, and you get to the point of having cash value of $100,000, again, just throwing numbers out. But the point is that the process is still the same. You get to a point of having cash value in your $500,000 life insurance policy, and you get that report telling you how much cash value, you'd be like, let me make a phone call. So you would call the insurance company and tell them you want a loan for the cash value of your policy. Okay, you process the application. It's not going to take long. They already do business with you. They're not checking your credit report or nothing. It's between you and them. It's not on any record other than with them. And you got to wait 30 days to get that $100,000. I would rather pay that discretionary loan with my insurance company than go to a bank and get a loan where you paying higher interest and dealing with the stress of they BS rules or terms and conditions, whatever. Why deal with them? We need to start acting like the bank themselves, because they use our money to make money, but they ain't giving us a darn bit of it. Y'all got to think outside the box. Wealthy people have been doing this for generations. So I'm not making this stuff up. You ain't got to believe me. Go call your insurance agent right now. Some of y'all don't even remember whether you have term life or whole life. But because you don't listen to somebody else, they don't give you bad information. You just been paying a bill for nothing in the hopes that you die before it expire. That's sad. Sad. Okay. Anything above $100,000 is taxable in whole life insurance. Now, the universal life insurance part of it, well, again, everything that I'm saying now applies to both. So the cons of whole life insurance, I've already told you the pros, so I don't even have to go over it again. The cons of whole life insurance: it is more expensive than term life. Okay, again, you get what you pay for. Okay, for Kayla, for her whole life, for $50,000, her premium is $49 a month. Yeah, $49 a month for $50,000. And when she turned 18, her cash value doubles. Kayla's 14 now. So when she turned 18, after paying $49 a month, and yes, when she turned 18, she will be paying her own premium. I'll pay it up until the end. And I'll consider not asking for reimbursement. You heard me, Kayla? Nothing. Want what? What are you doing with it? Oh, okay. Make sure the eggs are chopped up good. Thank you. Okay. Con, again, more expensive than term life. The policy is not flexible. It is what it is. The cash value accrual is terribly slow, 5 to 10 years. But again, that depends on how much you pay into it. If you stick to just paying just like a credit card. If you stick to paying the minimum, it's going to take you longer to pay it off. Same principle for your whole life insurance. The more you pay into it, the more cash value you can have access to. So with Kayla's policy, am I going to pay more into it? Yes, because when she turns 18, even though when she turns 18, her cash value will double, I'm still going to put more into it so she'll get even more. Along with my policy, I'm going to pay more than my $100 a month for my policy so that I can get access to cash value quicker. And like when I have a windfall of money come in, whether that be stimulus, taxes, extra money from my businesses, whatever the case may be, I may put a few thousand to go ahead and get to the point where I'm already at a point where I can generate cash value and get a loan off the cash value, not my policy. So let's say next year, tax season. Let's say I take my whole income tax. Okay, let's say I have $6,000 and I put all that towards my whole life insurance policy. As soon as I do that, I would have generated cash value that I could get a loan from to help grow my business, add capital to my business, or put towards buying a house. And I only have to wait 30 days from doing it once I request it. Yeah. Makes sense to me. All the money that I pay into a whole life insurance, any life insurance policy, I think it's only fair that the person that owns the policy should have some value that they can get out of the policy before they die. I mean, yeah, I love my kids. And I'm trying to provide them all the tools they need to be successful in life and be prepared when I die. But mama want to do some things too while I'm alive. So why not? I'm the one paying into it. That's another thing we're going to talk about on another video talking about life insurance. If you and your family come together and share the cost of premium, let's say me, my boys, and my sister come together and buy a policy for my mother. Okay? We all pay on it. Okay, that could probably be $20 out of our pocket each month from each one of us. Okay, but we got a $50,000 policy on our mother to help when she passed, to be able to pay for her burial or whatever needs to take place, paying off the house, paying off her debt, and then splitting what's left amongst us. That's also generating a banking system for the family. So if you yourself are going to spend, let's say, $100 a month premium on just your policy, think of if you and your family get together and budget $100 or $200 a month, split amongst 5 people. Y'all split the cost. Y'all going to be spending about the same if you did a single policy on your own. You got a family of nieces and nephews who parents are not doing what they're supposed to do as far as financial security. You may want to get a policy on them, but you can split the cost with other family members to help support that. So yeah, we got to start thinking outside the box, people. This stuff is not new. We are so behind. It's ridiculous. All the stuff that I research, and it makes no sense that I have wasted, that most of us have wasted half of our life and didn't do none of this crap. Didn't do none of this stuff of financial security. And we have nobody to blame but ourselves. Because the school system, even college, they're not going to teach us how to get out of owing them money. They're not going to teach us. Society is not going to teach us. We got to get the information ourselves and go after it. Now, keep in mind, this has nothing to do with investing. I'm not talking about investing. That's another video. I'm just talking about how to utilize your whole life insurance policy. Again, personal choice. I don't know why in the heck anybody would have term life insurance. Makes no sense. You get nothing from it. The only people or person that benefit are the people you leave behind once you're in the ground collecting dust and bugs. I want to be cremated though. Next. Okay. Traditional whole life insurance pays the benefit upon your death and accumulates a cash value. It is paid up additions you because you pay into it. Your death benefit increases slightly and your cash value increases as well. Participating whole life is a mutual company that shares with the owners, which are you, me, okay, to share in their company profits, also called dividends, okay? Your lifestyle will dictate your risk. Now, I ain't gonna lie, I was surprised that my policy was approved. Even at the amount that I asked for, because I have diabetes and high blood pressure. Now, as long as I continue to improve my health, then I'll come off of that medication and I'll no longer have diabetes and high blood pressure. I don't know if that was a factor, but I was honest when I shared the information with my agent. But yeah, kudos for me. I'm glad it went through. I was kind of worried because I was gonna have to build that opportunity of whole life insurance through Kayla and my other kids if it didn't work out for me. Although I'm still gonna do that, but still, I just had to check and see. So it went through. All right. But yeah, your lifestyle and the risk that you take in life have a lot to do with whether you'll be approved or not. Meaning, like a firefighter or airplane pilot is at higher risk to die sooner, and a store manager is at a low risk, so their job dividend will be higher than the firefighter. Healthier, younger people and low-risk people at a lesser risk of dying soon will have a lower premium. When it is time to renew, a new assessment of each policyholder is analyzed, and your premium can go up or down. Meaning if you remain in good health at the time of your renewal, great, your premium goes down. If you have generated health risk when it's time to renew your policy or get a new policy, and that if that assessment turns out that you have generated risk, then your policy will be at a higher premium. You can convert the term of your policy at any time of renewal. For example, $1 million policy can be converted to a $60,000 term and a $40,000 whole when your status has changed based on health. Really? I still wouldn't do the term. I just stay where I'm at in a full whole life. That my agent will need to explain to me. I don't see why would you want to convert a whole life policy and convert it to partial term and partial whole. I'll ask about that later. A minor can get a guaranteed insurability option, which is also called a GIO. Child has options when they turn a certain age, like 18 or 21. I think it's just 18. But you can ask, can you have that put in place when they turn 21? I don't know if that's the case, but you can always ask. I'll find out myself. But you can convert it to continue coverage, which that's what's going to happen when Kayla turns 18. And when she turns 18, again, her cash value will double. So let's say she's 14 now. When she turns 18, and let's say her cash value at the time is $30,000. Okay, double, that'll be $60,000. That's not bad for an 18-year-old to have at that time. But again, just throwing some numbers out. I'm not giving you her exact value when she turns 18. I'm just throwing out numbers. Whatever her value is, it'll double when she turns 18 and converts to her own policy. She takes control of the policy then. That's why I say I may ask her to reimburse me all those years I've been paying into it. Nothing wrong with that. Next, universal whole life insurance. Takes the risk from the insurance company and puts it on the client, which is you, which is me. So do I recommend universal whole life? Absolutely not. Okay. Universal whole life offers the loss cost protection of a term life insurance and a savings element that can provide a cash value buildup. It has a flexible premium that you can adjust annually during renewal. Your premiums are allocated into investment accounts, but there is a cap on both profit and loss based on what the policy dictates. And you won't lose anything. I got to ask about that one too. Over time, the premium will skyrocket. You must pay the increase or you lose your cash value and your coverage is terminated. Yeah, you have to ask the questions and make sure your representative is giving you the right coverage. If you don't know the questions to ask, you need to do your research. Play this back before you have your appointment with your insurance rep. Okay? Again, I will post this presentation after the video. Almost done. How much coverage can you afford? Your coverage is based on your age and your income. Now, if you are age 18 to 40, okay, your income will be times your expected years of life. Meaning, the insurance company perceives if you are age 18 to 40, your expected life can be 25 years because anything can happen. We're not talking about natural death. Okay? So 25 times your income will tell you how much coverage you can get on an insurance policy. Age 41 to 50, the insurance company number of years is 20. So 20 times your income determines how much you qualify for in coverage. Okay? Age 51 to 60, the number is 15. 15 times your income determines how much coverage, so on and so on. So 61, 65 is 10, 66 to 70 is 5. If you're over 70, that's a special circumstance. I don't know why you would be getting, no. Well, I mean, not necessarily. That could fall back on what I said earlier. Let's say a 70-year-old. Now, there's some 70-year-olds that's still kicking and vital and working and they're doing some things. Never know. Let's say they have a business. They're not ready to retire. They want to keep running their business, and they could do what I mentioned before and pay more into their policy and have that immediate cash value. The more they pay into it generates more cash value that they could get a loan from. And again, let's say their policy they've been paying on for all these years is 500 to a million or even $2 million. They have a conversation with their insurance company and they'd be like, how much do I need to pay in to get this amount of value? I mean, they already have value in it, but again, they could take the value through a loan of the insurance company and utilize it for whatever reason they need to. So yeah, so I guess but we're talking about renewal and new policies. But that could be something that they could do as well, as I mentioned. Pay a lot up front to start the policy, and that'll automatically kick off immediate cash value and get a loan off that cash value. And so yeah, I guess that makes sense. That's just my perception of it. So if you can make some time, go online. You can find anything online. You need to use an investment calculator. And I'm just throwing some numbers out. It doesn't have to be accurate, just throwing numbers out to give you some calculations. A 30-year-old person has a $100 monthly budget for insurance. The term life is $7 per month at 8% over 20 years. That's $52,917. Or that same person gets whole life insurance at $100 per month at 8% over 20 years is $25,983, which equals a difference of $28,000. Did y'all understand that? Whole life, again, my opinion, is a better policy. Although I'm getting less at that 8% over 20 years, keep in mind that term life 20 years, that's 52,917 is the death benefit payout. There ain't nothing you getting. That's what's going to your family. But with the whole life, based on the cash value, again, the more you put in, the more cash value you generate. You could get a loan during this whole life that doesn't affect the death benefit, but with a whole life, you're going to be in it more than 20 years. But again, these are questions that you can ask your representative, and I will also ask when I do the interview to get a clear understanding of all that. Ways you can use your internal banking. I've actually already gone over this by mentioning about how to leverage your whole life insurance policy. But when you learn how to do this, you can create your family's banking system. You all can have your own banking system. You don't have to go to a traditional bank in the hopes of getting a loan and paying back higher interest. So yeah, you need to understand the power of that leverage. You need to use your savings in your whole life insurance policy. And the cash value is the savings. This is a loan between you and your carrier and not reported to the credit bureaus, personal or business. Again, you never should borrow against your policy. You get a loan based on the cash value within your policy. This allows you to have quick access to money to grow your personal and business objectives and gives you access to money while you are alive. To you, the person that has paid money into it, It allows you the opportunity to have access to money to do things that you still need to do while you kicking, while you alive and kicking. So leverage your policy and create family opportunities. These opportunities can afford you money to buy property, money to start a business, money to cover extended family members' funeral costs that family that has not initiated financial literacy and financial wellness. So instead of y'all doing a fish fry, or a car wash, or a GoFundMe, you don't have to go through that stress. You're already being stressed out going through bereavement. So have the easy access to the money you need to do things you need to do and want to do. You have access to have capital to grow your business, or even a opportunity comes up as a joint venture in a business. Most of us don't even have the opportunity or are given the opportunity, but we're not prepared because we don't have the money to invest for a joint venture. This is another way to have a large value emergency fund. Or let's say I want to pay for one of my kids' weddings or buy them a house when they get married. That's legacy. So again, the difference between getting a loan through your whole life insurance policy and going to a traditional bank, you get a loan with a bank, they're going to go through your credit, whether it be personal or business, is reported on your credit report, and based on the report data and your score, you're going to have a higher interest rate, as opposed to getting a loan on the cash value in your life policy is no credit check, reasonable interest rate, and that's between you and the insurance company, nobody else. Again, I only share the information. I'm not claiming to know all, be all. That's not it. But the information that I come across, if I see it to be valuable that we as a community can utilize, I'm going to share it. But if you want to learn more about everything I've been talking about as far as the whole life policy and how to leverage that, you can learn about infinite banking, and I'll share the information of who I watch and follow. Wealth Nation with Darius and Carmen Britt. I will have a link on the presentation. You can click and see what they're talking about. Again, I don't know every aspect of it, but I have at least given you information to get started. Okay. The link that I put on here, I chose it for a reason, and you will know why I chose it for a reason. They are experienced and licensed insurance agents. They can walk you through the process for complete understanding. And we got to learn to stop listening to all the noise. You got to find people you can trust and follow, because that just makes you more confused when you got so much going on and too many people that you're listening to for information. So listen to who you got to listen to, but narrow down to the best choices, the common sense choices. Okay? So no more excuses. Secure your family. We need to spend our money wisely and know what you can afford. The information shared is just a foundation of information to guide you in your decision making. Leave an estate plan that fits your objectives and family security that supports the attended family legacy. Put in place a plan of action you'd like your beneficiaries to follow upon their legacy gift. All right, we have reached the end of the road. I had mentioned before in Sunday's video, there's going to be a special guest. That information is TBA. I am waiting on that team to review the interview questions that I sent for them to approve. And then I told them to decide what day, date, and time is convenient for them, and I will accommodate that day, date, and time. So once I get confirmation, I will announce the video of the special guest and who that is. I won't mention until it has been completely confirmed. So again, as usual, I'm asking, please click like, share, and comment, and hit the subscribe button. We truly appreciate that. That helps our platform grow. So I hope that you found some value in the content shared today. So until next time, take care of yourselves and know that knowledge is the real power when you apply it. Thank you. And I'm going to say good night, people. Take care.